What's up, Bat fam? Here we are on the charts doing our weekly Zoom call here. Let's see if any of the Bat family community joins. If not, this will be on the YouTube channel for you guys to enjoy and see what's going to happen in this upcoming week in the market. First things first, shout out to Funded Traders Global. Thank you, Craig, very much for the free swag. You can see they sent me this really nice esports jersey type of shirt. It looks super sick. It feels super nice. I'm very thankful for it. It's a great fit. And not only that, super cool hat. And I had to customize it, my own touch on there. And here you go, on the side too. Yeah, looks pretty sick. I'm very thankful for it. And yeah, without further ado, let's get straight to business. So, I'll put this on just because it's my thinking cap now. Alright, first things first, we're going to start with the news for the week. So upcoming, we can see we have a lot of medium and high impact news upcoming this week. So Monday, new home sales for New York Open, not too much there. Medium impact news for the US dollar though. Durable goods orders, core durable goods orders, so high impact news for US dollar Tuesday morning during New York session, pre-New York session. We have conference board, consumer confidence, high impact news for the US dollar at 7 a.m. That's slightly into New York Open. Later that evening, we have high impact news for Australian dollar, which is consumer price index, which measures the overall rate of inflation, as well as the official cash rate for the New Zealand dollar. We have preliminary GDP for the US dollar Wednesday morning, pre-New York session. We also have retail sales, medium impact news for the Australian dollar during Asian session later that evening on Wednesday for those traders in the US. On Thursday morning, pre-New York session, we have GDP for the Canadian dollar and core price consumer expenditure. What is this again? Let me check it out. Personal consumption expenditure. So basically, it's a consumer price index, helps measure the overall rate of inflation. Just another measurement, another statistic that they use. We have unemployment claims as well during that same time, all pre-New York Open. And sorry for that noise, that was my water bottle that had fell. My rabbit's running around, wreaking havoc over here, knocking stuff down. Alright, and we're going to go to Forex, dailyfx.com real quick to check out what the other news that there might be that we're not seeing on Forex Factory. Yeah, we can see Germany consumer confidence Monday, or that'd be Tuesday evening or Monday evening, which would be pre-London Open. Yeah, same news. GDP growth rate for USD. We have Bank of England man speaking later that morning on Wednesday, it looks like. Yeah. Medium impact news for GBP. And we also have some Fed members speaking as well for the US dollar later that morning around 9 a.m. Pacific Standard Time. Be around 12 p.m. in the afternoon Eastern Standard Time. We have France inflation rates later on Wednesday night, so pre-London Open. Thursday, unemployment rates for Germany, London Open. India GDP, pre-New York, so this is during the crossover at 4 a.m. for Pacific Standard Time, 7 a.m. Eastern Standard Time. GDP for Canada, personal consumption expenditure for USD, as we just covered. High impact news for China. We have more Fed members speaking as well right after that high impact news. So we're going to have a very busy day on Friday. Yeah, Friday's a very busy day. I'm sorry, Thursday. And then here we are on Friday. Friday, a lot of high impact news, core inflation rates. Yeah, there is a mass amount of news upcoming this week. Core inflation rates for US dollar. Italy GDP and inflation rates. Yeah, we're going to end the month very, very volatile. It should be a great trading week. All right, next, moving on to gold here. This is going to be the first pair that we're covering. One moment, let me get a drink real quick. All right, so gold had a massive week here, and as you can see on the right hand side on the daily time frame, it came down, rejected this level of support. As you can see, this is the risk reward tool that we had to start the week to show the trading idea we were seeing. We had to drive up, just a break above this level of resistance to drive in buyers here, thinking the breakout was going to happen and make a new high, but it didn't. As you can see, price rejected and moved lower, which was in line with our analysis, and this is what I had anticipated, this move down here, which we did do, and then drive up. But what was not anticipated was this choppy price action, this manipulation to second liquidity to move lower and then drive higher. So we can remove this risk to reward tool. But overall, the analysis did play out. It broke above the previous week's high. Well, that'd be 2 weeks now. 2 weeks ago's high. So the new previous week's high would be, well, obviously right up here, since this is where we ended the week. So we need to make a few adjustments on our technicals since we have now tested them. As you can see, this level of supply was finally hit. Nice strong move up. This was a over 200 pip move. So from the low of this point, $2,016 up to $2,041. So a 250 pip move, $25 move. Very massive movement on gold in a single day. Crazy. Alrighty, so let's adjust this level of supply here to where we're currently at, where price is currently rejected from this area. You can see that this zone has finally been broken above. This area of resistance cannot be removed. Now we have some areas here that we need to be concerned about, where price broke above this area here, and then we have a particular type of level here, little resistance that was broken above. That price may come down to the 2030 price range. Alright, so on the right hand side, I'm going to go to the weekly time frame here. As you can see, last week closed very strong bullish with a very strong bullish candle. Let me make this a little bigger. There you go, much nicer. Much nicer. Okay. Let's remove that. Strong bullish candle close, multiple wick rejections, did not breach the monthly low as previous month's low as we were anticipating. Rejected off support, right at resistance here. Next candle for this upcoming week needs to move as such if we want to continue. May have a pullback down to 2030, which is what I was saying, that would be a good spot to hit. Could even be 2023, 2025, which is right where our zone is right here, based off the weekly time frame. You know, this would be a retest right in this little area of support that you can see on the higher time frame from the previous candle right here. So we might just pull back, retest that. We have multiple confluences, you know, the zone here that I'm seeing on the intraday time frame, and then on the higher time frame we can see this level right here that price broke above on this previous week's candle to drive that bullish move. So we may come back and pull back right there. That'd be a perfect sweet spot. But from there, we may see that move up and break the previous week's high and possibly even continue higher up into the 2050 price range. It's too early to tell. We would need to see these bearish movements first and then strong rejection in order to ride this up. So we could potentially look for entries right in that area, stop loss below here, target the previous high. You have to have a wide stop loss for now unless you wait for the rejection and then enter right below it. That would take a lot of patience, but if you enter a buy limit order here, you're going to have to make a wider stop loss to anticipate price driving lower. But if you do enter on the wick rejection and get a tight stop loss, this could be a 2.5 to even 3R plus trade, depending where your take profit is. And if it goes above all the way to 2050, that's just a potentially 5R to 3.5R trade. You know, very, very good risk to reward trade set up here on gold. However, the flip side of that is if we break below 2016, hang on one moment. Yeah, if we break up below 2016, 2017 right here where this level is, there'd be some concern for price to continue moving bullish. So our previous week's low right here where this wick is, need to mark this off. Alright, good. So, yeah, if we break below 2017, then we most likely are going to drive lower down to 2010 again. But that may or may not happen. Price is looking bullish right now, and as long as we stay above this point right here where we have our zone and how I had shown that higher time frame level support, we may just continue driving higher up to this area right here. We'll see what happens though. This could be the week that, you know, we have another 20 to 30 pip movement. I'm sorry, 200 to 300 pip movement on gold. Yeah, as you can see from here to here, $330 movement. And from here to here, $223 movement, 240 pip, 230 pip movement. All right, moving on. Next, we're going to talk about and analyze the NASDAQ 100 here. Alrighty, last week I was just doing some back testing, or I guess forward testing during New York session, and yeah, this is just the setup that I was looking at. It looked like price was going to keep driving up higher up into this area of resistance, which is the previous all-time high. The most recent all-time high that was made, but the most, you know, the all-time high that we had to just test. So we drove up to that area of resistance here. It did look like it was going to reject, but where price was rejecting from was not a good area to be rejecting from. It was kind of in the middle of nowhere. It needed to drive up to the previous all-time high to either take liquidity or break higher. And as you can see, it tested, consolidated, drove up one more time to make a new all-time high, took liquidity and broke lower. And that was the move I was just referring to. Looking for something like that. So selling anytime before getting up to that level is just too early. But buys, you know, in the middle here, and driving up to there is a great idea. It's a higher probability of working out. So I have this all-time high here that was made at almost 18100. It's 18095. So very strong rally there on the NASDAQ. Let's make this full screen. Okay, so let's zoom out to the weekly time frame on the right hand side. We can see that we closed with a bullish candle, but we failed to sustain above the previous week's candle, which means that we may have potentially just topped out and peaked in this market, in this indices. But that's not entirely determined quite yet. On the right hand, on the left hand side, we need to zoom out some. We are zoomed in way too closely. We are analyzing on the entry time frame, and that's just not suitable for us. So let's clean this up some. Alrighty, so we can see here that this minor level of support that needed hold has been broken. Price is looking to likely trend bearish now, potentially down to where this level is and where the zone is at 17800 price range, which would be a nearly 120 point move from where we're currently at, where price closed on Friday. Let's zoom in a bit closer here. going to go to the daily time frame on the right hand side. Yeah, it is likely that price may pull back into this level and continue lower down to there, or we could see a move up one more time, wick right into here, and as you can see on the daily time frame on the right hand side, that'd be kind of a steeper retracement. But either way, that's what I am seeing, and I'll put on the risk to reward tool here, something as such. Continuation down, this could be a nice 1-to-1 setup, and if it breaks lower, you know, down to here, potentially 1.765, and maybe even lower than that, but this would be a good potential first area to look to exit the trade. Right at the, not previous day's low, this is the previous day's low because it's where Friday closed, but the prior day on Thursday, this daily candle, target that low there. That'd be a good trade setup in my opinion. So it could be a 1R to 2R trade depending where you enter. And if there is a liquidity sweep or a move up to take liquidity to suck buyers in before rejecting and moving lower, could further increase your risk to reward by getting a better entry at 1800. There's a good chance we could see 1800, or we just continue off of Friday's movements and just keep opening, or just keep moving bearish, open bearish, and move lower, which would be a potential entry at 1795 if we get some type of potential pullback. But overall, let me go to the monthly real quick. Overall, NASDAQ is closing bullish. We may have a little bit left to go, but currently, yeah, I am seeing a pullback for now. It's hard to determine if the run is actually over. We are pretty extended. I still believe there may be some left, and if we use our Fibonacci projection tool here, we can see where we are looking to drive up to some potential areas, which would be, yeah, we might see 191, 192, but just based off Fibonacci's, and if price is actually following this, which it does appear to be so, you know, from this low point here, higher low point nearly at the 38.2 level, didn't quite hit, did not quite reach. One could even argue that the trend started here based on the lower time frames. This is the first higher low point, transitioning from bullish to bearish market and moving much higher. So we can see we rejected from the 38.2 level here, and from there had a very strong movement up to this point, 17071, which is the first take profit point. Drove a little bit beyond that, and here we are now where price closed. So we could even see 185. 185 to 1900, I would say, is most likely the peak for the NASDAQ on this bullish rally here. Something like this where this blue zone is, I would get out. That's pretty extended. We may see that point. And if we look on the left hand side of the 4-hour time frame, we're not too far away from that. It does look like we have a little bit left to go, but if we look at the right hand side again at the monthly, price could potentially come down at this point, the 171, where this previous month low is, or this monthly low is, and then try and drive higher for next month's candle. It could even sweep below it, make a wick, flip bullish, and drive up to here, and then that's the peak, end of the rally, end of the bull run for the NASDAQ. We'll see what happens though, but ultimately short-term bearish. We'll see what happens from there, and we may end up continuing bullish through next month to 185 up to 19200 potentially. Next, we're going to look at US 30 here. US 30 idea kind of played out last week. You can see we opened bearish and drove down to this point, but did not quite hit this level of demand. A lot of people were looking to exit here, but we did not quite reach it. So if you would have managed this trade, went break even and close to 50% at a particular area and not been greedy, you would have been fine. But if you didn't manage the trade right, or if you didn't manage your stop loss, you most likely would have taken a loss if you took that setup. But ultimately, it was a really good move. Yeah, it moved for 300 points. So at the end of the day, you gotta manage your trade and not be greedy. That's a really strong move. That's a really good movement. All right, EOS 30 though, we are in that overall all-time high projection area, take profit area here. We've seen some major wick rejections, but that doesn't necessarily mean we're completely finished yet, but we are pretty much getting to that point. There might be a little bit left up to the 4,000 price range, or I guess 40,000 price range. If price does reach that, then most likely that is going to be the end of the bull run. We are pretty extended at this point in time, as you can see here. And again, we can use our Fibonacci tool to kind of determine where the projections are at. We definitely have hit the first one, but where we may go, you see, yep, exactly, 4,000. I will be definitely looking to exit or not look to continue taking buys on US 30 at this point at the 4,000 price range. There's a good chance that we may reject from here and start moving bearish, but you should never try and predict tops in times of bull runs, but there's a good chance we reject from there. We've had a massive run through this past year, all up to where we're at now. So if we go to January 2023, which is right here, go to March 2023 at the low, to where we're at now, 25% return on the US 30, the Dow Jones Industrial Average. But a lot of stocks and other pairs have moved significantly more than that. But that's quite a significant movement in just a single year for the Dow Jones. One could argue, yeah, it's always gone up since its inception. Well, not entirely up. There's been periods of pullback and where it's been bearish, but long term it has gone higher and higher. Now, if we do break above the 40,000 point, 50,000 would be the overall long-term target, but that's not going to play out this year. That's going to take quite some time, like 5 to 10 years to get up to this point. Just look at the previous price action. It's taken all this time to get where we're at now. So we could see this point eventually, but for the short term, 40,000, then potentially back down at this point and try back lower, or could continue its bullish run. But ultimately looking at to come down here for the short term, then continue higher or move lower. On an intraday perspective, we are looking to drive lower down to this area of resistance, now potentially support, or this massive zone here, our projection target area. We may just drive down to this point here, which would be nearly a 200-point move, potentially 300-point move if we hit this level here where we originally broke out from. We zoom out to the 12-hour time frame. Just massive wick rejection. We have a minor level of support here that if we just break below that point, 39025, break below that, that's most likely going to initiate a lot of sell stop orders and drive the market lower with some strong momentum. So a good potential short-term sell setup could be something like this here. Depending where you enter, if you have a sell stop here, you would enter on momentum and price could potentially drive lower. You would manage your stop loss very quickly and get out as soon as price hits here or to the overall point. If you wait for the wick rejection, if there is a potential wick rejection, price drives up to this point once again, You can enter, and then it drives lower. You could really increase your risk to reward on that too. But there's a good chance that price may just open bearish to start the week. You might be able to get on a pullback on this particular candle, but if there is one more drive up, then you could obviously enter on that wick and catch the move down. Alrighty. Oh, let me go back here. Whoops. That covers our main trading pairs here. The next pairs we're going to cover are just XRP, basic attention token. Currently XRP is at 54 cents, nearly 55 cents. It's been struggling here. We did make a monthly low, and we did reject from that level of resistance that I was saying, but we are struggling to move lower currently. It does look like a bearish move brewing up. You can see that there's a lot of indecision here. It's kind of slow, not as much volume, and it does look like we're just a move is brewing to move lower as such. Looks like that's coming through. However, given the fact that we moved bearish here, moved bullish, although we couldn't break above, this is what the main factor to me is. The fact that we rejected this area of resistance kind of as a retest is indicating to me that we're just going to move lower. But given the fact that on this move, on this push, we didn't hit these lows here, there's a chance, and to me not a very high chance, but there is a potential chance that price is just going to break above, come up to this point again, break above, and we start just trending up here up to the 70-cent point. Break out of all this junk and start trending once more. It is currently too early to tell, but based off the weekly time frame, you can see that we're starting to close bearish. There's 6 hours left, but we did not break above the previous week, break below the previous week's low, or nor above the previous week's high. We are just ranging, so we need to see something. I'm still leaning more towards bearish, as I had just stated. So if we break below this prior week's low, we may end up seeing that 40-cent price range. 44 cent down to 35 cent as such. But overall, prospects still very bullish on XRP, and there's nothing to be worried about. And if it does work out, that'd be absolutely fantastic. That's what we want. And lastly, basic attention token. You can see that price is really starting to hold here, and we may really start breaking out here soon. If price does break below that level of support here that it's making at 25 cents, 24-cent price range, we could see 20 cents once again, and if that breaks below, we may see 16 and 15 cents. But overall, still very bullish on basic attention token, and it just looks absolutely amazing. Very clear price action. It's developing very nicely. You can see on the monthly time frame, bullish. If we can close a strong bullish candle, we have a very strong likelihood that price may just start really moving bullish here. Start going on its bull run from up to 35 cents, 50 cents, and beyond up to 75 and higher. That would be what we're looking for here, potentially 2 to 5x move. And if we end up making new all-time highs, could be even an 8x investment. But overall, too early to tell. Long way to go for that. But that's it for this week. This will be uploaded on YouTube here soon. If you enjoyed, please like and subscribe. And if you have not already joined my free Telegram channel, BAT Signals, go ahead and do so. The link for the Telegram is in the video description. And if you are interested in a trading competition, Funded Traders Global is hosting its March trading competition. Registration is still open. I will include that link in the video description as well, so there is still time to join. And once again, shout out to you, Craig. Thanks for the Funded Trader Global swag. I greatly appreciate it. And until next time, hope you guys have a great trading week. Please like, subscribe, and peace.